From Bloomberg's World Headquarters in Midtown Manhattan, I'm Matt Miller.
And from our studios in Washington, D.C., I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Coming up, Bitcoin is still hovering at that $30,000 level, but could Fed expectations in the U.S. crypto crackdown put that rally on shaky ground? We'll ask Alex Thorn of Galaxy Digital.
And SEC Chair Gary Gensler seeks more crypto sway as Republican lawmakers and one of his own commissioners criticize his tough approach to digital assets.
And don't forget, your U.S. taxes are due today. What you need to know, as the frenzy to file could bring some extra wrinkles and tricky situations for crypto holders. So all of that is ahead, but first let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And what you will find that broadly, it is an update for digital assets. As I already said, Bitcoin is hanging out just north of that $30,000 level. We are up about 2.5% on the day. Ether, for its part, up about 0.9%, but remains north of $2,000. And some of those altcoins like Polkadot actually outperforming. It's up about 3% in this Tuesday session. And of course, all of that positivity for digital tokens themselves is feeding through to some of those crypto related equities. Marathon Digital, the miner, one example of that, up about 3% today, Matt.
All right, well, a lot of the gains that we've seen from Bitcoin seem to be correlation. But the thing is, the correlation with the S&P 500, for example, is actually heading down. This chart goes all the way back to 2014. And you can see we picked up a really strong relationship between Bitcoin and stocks after the pandemic began. But we're finally starting to see that turn over as we weigh in a lot of other things like regulation and interest rates. Industry leaders have been weighing on Bitcoin's bounce against the growing regulatory heat.
The government has kind of gone on full jihad against crypto.
I think you're seeing the international markets adopting a set of fair and good rules for digital assets, where in the U.S., they're just trying to kill it.
If we don't do something in the U.S., we're going to be in this bifurcated world where we have legislation outside the U.S. that's more friendly to crypto. I just don't want us to stay so far behind in the U.S. that we lose sight of what the value is.
Crypto is a global industry. You could have Bitcoin go up despite the U.S.'s reluctance to embrace it.
Many people realize that this is really what Bitcoin was born to do. It was born to be an asset where you control the keys, you hold your money, and nobody else does.
And that gives me, great optimism and confidence that the crypto community has been re-galvanized.
Joining us now is Alex Thorn, Galaxy Digital Head of Firmwide Research. Alex, thanks so much for coming in. Great to have you in the studio.
Yeah.
I wonder about, I said Gary Gensler's tough approach, but it really seems like a nuclear approach, right? I mean, he has been telling all the players in crypto, you're welcome to come in and register, but there seems to be no path to do that. Why do you think that the SEC seems to want to stamp out this business in America?
I mean, I think there's been a lot of instances with lacks of disclosure that are clearly troubling for crypto. There's no doubt about that, right? That's what Chair Gensler says on a repeated basis. I do think it's hard to form fit and enforce fit crypto into this established regulatory framework when it's so fundamentally different in a lot of ways. There are things that are similar, there's no doubt. I don't know exactly why. I think it's very troubling for American capital markets. You look at the rest of the world going in the completely opposite direction, not just trying to stamp it out, but in the UK and Hong Kong and Dubai, in Europe, actually enacting and working on progressive regulations that businesses can work with. Meanwhile, in the US, we have this sort of broad-based attack on the industry.
Yeah, in fact, we saw the CEO of Coinbase talking to the former UK Chancellor of the Exchequer today, saying, you know what, everything's on the table. We might move our business out of the U.S. eventually. And we've heard, Marathon Digital and a number of other businesses say the same thing. Do you think we're going to see an exodus of a crypto business out of the U.S.?
I really hope not, Matt. I think there's a lot about cryptocurrency and public blockchains that really aligns with American values: openness, liberty, sovereignty, capital markets, free markets. I think that would be a huge loss for the U.S., especially at a time when we're clearly entering a more multipolar world. I look at what Congress is working on now in the House Financial Services Committee, the stablecoin legislation, I think, if done correctly, could be extremely additive and supportive to the U.S. dollar. And not only in expanding the reach of the dollar, but also supporting, creating a new marginal buyer of U.S. debt, which I think would be really positive for the country.
Yeah, Alex, it's Kaylee in Washington. I actually just returned from Capitol Hill, where I was in the financial services hearing with Gary Gensler. I'll be at that stablecoin hearing tomorrow. I wonder how, though, even if we do get some form of legislation on the stablecoin front, you ultimately see that interacting with something akin to a CBDC, some kind of digital dollar. We're actually just getting a headline out from Michelle Bowman of the Federal Reserve saying she doubts the benefit of a U.S. central bank digital currency. Are we not even going to see that happen? Do stablecoins serve that role?
I think that's a great question. No one really knows the answer. You saw the Boston Fed had done a lot of work with MIT on one way to do a CBDC, Kaylee. I think a sort of publicly regulated and properly transparent, privately issued stablecoin could easily serve that role in the U.S. market. And globally, it would support the dollar. If you recall, Chairman Powell has repeatedly said that he doesn't want to disintermediate the two-tiered banking system, which to me has always implied sort of a tepid or even ambivalence on behalf of at least Fed leadership over issuing a CBDC. I'm not really sure what we mean by a CBDC yet, and it's really not clear whether they do either.
Yeah, that's a very good point. And of course, as we all have these ongoing regulatory conversations, ultimately, does it actually matter for market pricing? Because we continue to see new players slapped with enforcement actions. It seems the crackdown is continuing. Bitcoin and other digital assets don't really seem to be blinking.
Yeah, I mean, Bitcoin is probably the best performing asset of the year. Now, obviously, last year was a different story for cryptos and also a lot of other things. You got to remember, it's a global asset class, right? We have a lot of capital and allocators in the U.S., no doubt, that are impactful for these markets as well as many others. But there are people all around the world that own and trade and use cryptocurrencies, including Bitcoin. Yeah, I mean, it's hard to look. I think if you look at some of the recent actions, they're extremely U.S. specific. And again, it's not just that other countries aren't moving in sort of as restrictive a manner. You have countries moving in the opposite direction. And we're talking about, Western countries and countries with advanced capital markets doing so.
There are coins. Algorand is an example I can think of that it makes sense. The price would appreciate as the product they're building on that blockchain, improves. Bitcoin isn't one of those, right? It's really just a store of value. Asset. Why do you think we've seen the price increase from 16,000 directly after FTX to 30,000 today?
Great question, Matt. I think of Bitcoin typically as like a non-sovereign FX. Very hard. People ask how to value Bitcoin, and so there's no cash flows, or it's not an equity, right? And how do you value a foreign currency? Well, typically against something else, right? And obviously that's how Bitcoin trades. I think last year was obviously a major deleveraging event for crypto in general and Bitcoin. I think at the beginning of this year, you saw Bitcoin at 16.6. I think a lot of people realized that that was really the product of inorganic forced selling. And to start the year, it just looked low. And you'd had an equities rally leading into the end of last year, right in the beginning of this year. And I think there was initial catch-up trade. And then I would say we at Galaxy had one of our biggest trading days ever the day the market opened after Silicon Valley Bank and Signature Bank closed. I think there's absolutely a narrative where Bitcoin, which is open and unseizable and transparent, really contrasts with the state of the banking system, not just here, but in general.
I buy that totally from a retail standpoint, right? For the guy who's on Reddit and really believes in the origin story of Bitcoin and is a fan of, freedom. But from the institutional side, what are you hearing? And you're one of the best positioned people to tell us what the institutional feeling is on these assets. I mean, are they holding? Are they back in? Is institutional adoption still to come?
It's a great question. We saw it get really interesting, right? We've gone through a lot of phases just in the last couple months. 16.6 to start the year, there was still a lot of despair in the institutional crowd, those that were interested in crypto. At 20 and 25, you started to see the people who had gotten interested but either not allocated or had gotten out in 2022, they started picking up the phone and asking questions. At 30, they're starting to knock on the door, and we've already seen some chunky allocations from traditional institutional investors this year. I think we'll see more, but I mean, it's a function of momentum as well. I mean, I really do think if we start to move beyond 30, north of 30, you'll start to see people banging that door down.
And that's on Bitcoin. If we could also just talk about Ether now that the Shanghai upgrade has been completed. I was just saying it's north of $2,000. How fundamentally important is that to the trajectory of Ether going forward?
I think it is important, Kaylee. The Shanghai and Capella upgrades was the completion of that long-awaited merge upgrade where Ethereum transitioned from proof of work to proof of stake. So just that milestone alone, I mean, this was something like 7 years in the making, this upgrade. That's an achievement. I think that made a lot of people feel really comfortable. They can now move on to developing the things that they really want on Ethereum, which are scalability to enhance rollups and all these other layer 2 types of things, sort of actual features as opposed to just sort of this big, long-awaited transition. It also alters the economics of the chain in general, right? It enables unstaking. So now you don't have this weird supply lockup thing. The sort of free market can really do its thing. I think it de-risked investing in ETH, or at least staking your ETH if you are an investor, significantly.
You got to be able to get it out, right?
I would think so.
Put it in. You want to pull it out as well.
Yeah.
Awesome talking to you. Thanks so much for coming by. Really appreciate your visit. Alex Thorn there of Galaxy Digital talking to us about crypto. We're going to talk about the regulation side coming up. Rettig joins us, Polygon Labs Chief Policy Officer.
Plus, on the subject of regulation, Congress putting Gary Gensler in the hot seat. We'll have highlights from the SEC chair's testimony on crypto regulation ahead. We spoke about that with Representative Richie Torres, the Democrat from New York.
I question whether he has been effective with respect to crypto. 2 years later, he continues to have the view that most of the industry is out of compliance. Albert Einstein once said, if you do the same thing over and over again and expect a different result, that's the definition of insanity. So a case could be made that Congress needs to step in.
To say that companies that have been operating illegal securities exchanges for several years should be in discussions about whether or not it pleases them to comply with the law in the future. That's not the attitude we have toward crime in the streets, and it shouldn't be the attitude we have toward crime in the suites.
That was Democratic Representative Brad Sherman from California speaking with me earlier after the House hearing with SEC Chair Gary Gensler today. Gensler brushed off criticism from Republican lawmakers over his aggressive stance on crypto and called for more resources to clamp down further. Meanwhile, Hester Peirce, one of the SEC's 2 Republican commissioners, expressed doubt that Congress will pass legislation on crypto in the near term. She told me in an interview yesterday, quote, with the banking events of this year, I just think it's really shifted Congress's focus. There's still people in Congress who definitely are focused on it, but it makes it harder to get the time of the committees. Let's continue this conversation now. Rebecca Rettig joins us. She's Chief Policy Officer at Polygon Labs, who is with us now. So, Rebecca, thank you very much for your time. Obviously, if you were to listen in on the Gensler hearing in House Financial Services today, it would indicate that lawmakers actually very much are engaged with the issue of crypto regulation. But engagement doesn't always necessarily translate ultimately into policy, into legislation that could define the rules of the road. What kind of conversations are you having, and what could we actually see done in this Congress?
I think we'll continue to see proposals like we just saw from the House Financial Services Committee on the stablecoin bill. And I do think, as Commissioner Peirce alluded to in the quote that you showed at the beginning of this, that there are efforts across the board to build out bespoke regulation for crypto, both for centralized actors and otherwise in the space. Whether we will see there being meaningful engagement to get it passed through both the House and the Senate in the next 2 years for this Congress, I think may be difficult. But to your point, people are engaged. Congress has started learning about it, and everybody understands that this is a pressing issue where we need to have some clarity in the United States and likely coming through the legislative process.
Well, if we could focus just specifically on stablecoins, this isn't a new bill. This was a bill that already had been introduced and didn't get very far. So why would it be different this time around?
I think there is greater engagement. I think that there's a lot of movement outside of the United States on regulation for crypto. The UK has already classified stablecoins as a financial instrument and made clear that they will be bringing regulation down. The same is true in the European Union with the markets and crypto asset regulation. And so there's a lot of movement outside of the United States. as it comes to both stablecoins, crypto assets, and the crypto markets in general. And I think that there's an understanding, particularly from Chairman McHenry, that there needs to be something done through the legislative process to make sure that there is clarity and a way for companies in the United States in the crypto business to move forward. I think ensuring that crypto businesses can stay here is important for the U.S. economic markets. And so I think it is one of the priorities for Chair McHenry.
I mean, one of the things people have wondered about Gensler is why he doesn't put together more regulation around crypto, hasn't in the past couple of years. Another group of people might wonder why he hasn't brought more cases against crypto exchanges and, ICOs. Listen to what he said about maybe he just doesn't have enough money right now.
In terms of digital assets, we could certainly use more resources. I mean, it is definitely there are more things to look at and investigate than we have people on the staff to do.
Do you think Gensler wants more resources for more enforcement, or do you think he actually wants to write regulation that the industry so badly needs?
Well, I certainly think he wants more resources, as he said in this quote, to, do more digging and find out more about the industry, particularly, to continue on with enforcement, because one of the themes he definitely pressed during today's hearing was that the non-compliance is part of the business model in crypto, which is not true, as we've seen from many good actors in this space. But I think he does believe that bringing more enforcement is important. He has put out more recently a notice for renewed rulemaking, so I think he's showing those efforts as well. But I certainly believe that enforcement is one of the mainstays of his time in office, for sure, against the crypto industry.
Well, and of course, we continue to see actions out of the SEC, including yesterday, the enforcement action around Bittrex. The subject of exchanges, this follows just days ago, the new proposed rules on exchanges. When I spoke with Commissioner Peirce yesterday, she said, and this is a quote, if that were to be put into place, it's saying you basically have to centralize everything so that we can regulate it, which is problematic. Do you see that as being true, Rebecca, that in order for anything to be regulated, it can't be decentralized?
I mean, I think that is the way our regulations are written to date and our laws are written to date. So the way that the securities laws are written with an intermediary in mind. That's what was contemplated in the 1930s. I'm not sure that the people who wrote regulations back then for our securities markets and our capital markets could have fathomed that we'd have technology that disintermediated the way we engage with the exchange of assets. And so I think that this rule and a number of other types of regulations we've seen contemplate that as well, because it's very hard for people to conceptualize that some of these activities can happen without an intermediary in mind. So we've seen lots of efforts across the board, including with some parts in the new proposed rulemaking from the SEC that looks to centralize everything or just assume that there has to be a centralized actor in the middle because, one, that's how our securities laws are written, and two, that's how we're used to seeing our financial markets operate over these past decades.
All right, Rebecca, thanks so much for joining us. Rebecca Rettig there of Polygon Labs talking to us about regulation and compliance, if it is even possible. Be sure to check out our Bloomberg Crypto podcast, which dives deeper than the daily market buzz to explore the stories and people shaping the ever-evolving digital landscape. Look for that every weekday wherever you get your podcasts. This is Bloomberg.
This is Bloomberg Crypto. I'm Kaylee Lyons in Washington with Matt Miller in New York. Now to some crypto stories that caught our attention this week. Coinbase may consider moving its headquarters outside the U.S. unless the country changes its approach to regulation. That's the latest from the CEO, Brian Armstrong, who spoke at a fintech conference earlier in London. In March, the SEC told Coinbase it plans to bring an enforcement action against the exchange.
M&A activity in the crypto space reached an all-time high last quarter. According to Architect Partners, 54 transactions were made in the first 3 months of 2023. Firms that were struggling to find VC funding are now putting themselves up for sale.
And finally, today is the deadline to file taxes in the U.S., and that might bring a few extra wrinkles for holders of crypto. This year, the IRS has made a few adjustments to the 1040 income tax form and included new wording and filing instructions to make sure NFTs are included. So what exactly does that mean? Let's get some clarity now. Joining us for more is Bloomberg tax reporter Erin Slowey. So, Erin, why is this year different? What do those changes actually mean for people trying to get their taxes filed today?
Yeah, so the IRS had, like you said, they adjusted their income tax return form. And prior to this year, they used, when referring to cryptocurrency, they used virtual currency. And so there was some confusion and ambiguity as to whether or not that included NFTs. So this year, the IRS updated their forms, which seems small, but is pretty significant in that now we know and that NFTs are included and something that taxpayers have to report.
It's interesting that so the IRS considers crypto assets currencies rather than commodities.
Yes.
I think that's really interesting. So we had a market downturn and we had, bankruptcies galore. Obviously, the price of Bitcoin has come back up, but crypto investors, are their taxes going to be more difficult to deal with this year, last year, for this year?
Well, for crypto investors that experienced losses over the past year, they'll be really interested in something called tax loss harvesting, which is where an investor can sell an asset at a loss and and reduce their overall tax liability. So the investor can deduct up to $3,000 worth of their losses against their overall income. And then for investors that were caught up in defunct exchanges like FTX, those investments will be frozen and kind of in limbo until those investigations are finalized.
Speaking in limbo, it does feel like the whole tax regime around crypto is still in flux. What kind of changes could we expect going forward after this year's deadline has passed?
Something that is very highly anticipated is the IRS and Treasury rules on crypto reporting requirements that stemmed from the 2021 infrastructure law. Those requirements were supposed to go into effect January 1st of this year, and these requirements they require brokers to report client transactions to the IRS. And like I said, they're supposed to go into effect January 1st, but the IRS and Treasury punted it until after the final rules are released. And so any day now, we're expecting those rules in their proposed form. And I think the crypto industry is really eager to see what exactly they are required to report and who will be required to report.
As if taxes weren't complicated enough already. Bloomberg's Erin Slowey of Bloomberg Tax, thank you so much, and thank you for helping us make sense of that. Matt, have you filed your taxes already, or are you pushing it right up to the limit?
Right up to the last minute. I'm waiting till 11:59. No, of course, I have an international situation, so it makes it more difficult. But I wish everyone out there best of luck.
Yeah, happy tax day. Come back to us on Bloomberg Crypto next week, Tuesdays, 1 p.m. New York time. This is Bloomberg.